From the floor of the CME Group on Friday, October 8th, the day everybody was waiting for. And to be honest with you, when the numbers were released, it was kind of like a non-event. However, the S&P and NASDAQ, when that data was released at 7:30, saw a spike down below yesterday's lows and below the early Globex lows, and it looked like the tone of the day was set for sure for a move south. However, not 2 minutes later, both of them went zooming higher above yesterday's settled prices, and then rejected the Globex highs at the time, which was 59.5 in the S&P and 19.25 in the NASDAQ. What was this leading to? An opening that surely showed a mixed bag of trading. But this morning, Top Notch Trading went out with his daily report, and he had two key levels on the downside. 52 even was pivotal, 51.30 was his downside pound, which are directional levels. 9 o'clock update this morning came out that the S&P was looking for a 51 objective and the NASDAQ was looking for a 97 objective. If those levels hold by 10 o'clock, those babies are good to go. So what happens by 10 o'clock? The S&P seeks a 51.5 low, just missing that 51. The NASDAQ hits 98 low, missing 97. It took a while, but after all the shake and bake and backfill, back and forth, these markets took off, saw the highs above the Globex, and right now, as I speak, the S&P is up to 61.5, which took out yesterday's high of 0.5. Then what happens? The 10 handle rule that everybody knows about from Mr. Top Step, etc. is in the cards right now for S&Ps. But Top Notch Trading right now believes that yesterday we had a high in Globex at 63.75. Top Notch is looking for that level to be achieved today, but a crucial resistance level today could be at 68. Top Notch is recommending to look for a short price there using stops. Nothing's foolproof, and that's going to be the high for the day before the weekend is over. Overall, huge resistance between 77 and 78.5. And overall, ever since I came back a couple weeks ago with that ascending right triangle that showed this bullish move higher in the S&Ps, the crossing pattern goes all the way until January or February of next year. Now, is this rally going to continue for the next 3 or 4 months? It's hard to say. Overall, though, there should be a nice bit of a retracement back to that underlying ascending trend line that developed in that ascending right triangle. But that level is at 57, and that's 1057. So no way soon are we going to see that levels. Overall, I expect these markets to now see some consolidation, a little back and forth. Look for the opening range of the S&P at 55.5 to 56.5 today. That should show some nice support. A turn there. They could seek another move lower. I really doubt that at this time. The NASDAQ opened up at 12 this morning. Don't see it getting back below there. But I just want to point out one more huge technical aspect about the NASDAQ future. If you look at the open interest sheets that come out every day, and it shows you the amount of volume being traded and everything, this sheet also shows you where the contract highs are. The big contract high in that December NASDAQ right now stands at 2032. However, and it's a big one, the E-mini contract high is at 2045.5. That's a 13.5 handle discretion between the two. That kind of confirms another bullish move higher. Anyway, that'll be key. 2045.5 is a big objective right now in the NASDAQ, and I suspect that if that goes, the S&P is going to go seek that 77 to 78.5 one day at a time. Enjoy the weekend, and we'll see you next week.